Something absolutely wild is happening in Ontario right now. And if you own a home, if you're trying to buy a home, or if you've been watching this housing market with any level of interest over the past few years, you need to hear this. Housing demand across the province is not just slowing down, it is evaporating. Listings are piling up, buyers are disappearing, and the Ontario Premier is scrambling to figure out what to do about it. This is a dramatic shift that almost nobody saw coming at this speed. And today, we are going to break the entire thing down. But before we get into it, if you're not subscribed to this channel yet, hit that subscribe button right now and turn on the bell notification so you never miss a video like this one. We cover the biggest stories in Canadian real estate, economics, and politics, and trust me, you are going to want to stay up to date on what is unfolding. All right, let's get into it. For years, the story in Ontario was simple. There were too many people and not enough homes. Prices went up. Bidding wars became the norm. People were driving 3 hours outside of Toronto just to find something remotely affordable, and even then they were competing with dozens of other buyers. The narrative was always the same. We have a supply crisis. We need to build more. Demand is insatiable. Ontario is the economic engine of Canada, and people will always want to live here. That was the story. That was the assumption baked into government policy, into municipal planning, into every condo pre-construction pitch you ever saw. And now, almost overnight, that story is falling apart. Let's look at the numbers, because the numbers tell a story that is hard to ignore. Across the Greater Toronto Area, active listings have surged to levels we have not seen in over a decade. We are talking about inventory levels that are 50, 60, sometimes 70% higher than they were just a year ago. In some suburban markets around the GTA, the months of supply, which is the measure of how long it would take to sell all the homes currently listed if no new ones came on the market, has ballooned past 6 months. Anything above 6 months is traditionally considered a buyer's market. Some areas are pushing past 8 and 9 months of supply. That is territory we have not seen since the aftermath of the 2008 financial crisis in some of these communities. And it is not just the GTA. Cities like Hamilton, London, Kitchener-Waterloo, Ottawa, Barrie, all across the province, the same pattern is emerging. Listings are going up, sales are going down, prices are softening. In some condo markets, particularly in downtown Toronto, prices have dropped 15 to 20% from their peak. There are buildings where investors who bought pre-construction units 2 or 3 years ago are now looking at closing on properties that are worth less than what they paid. Some of them cannot close at all because the appraisals are coming in too low for the banks to lend on. This is creating a cascading problem that is sending ripples through the entire market. So what happened? How did we go from a market where people were writing love letters to sellers and waiving every condition imaginable just to get a shot at buying a home to a market where homes are sitting for months with barely a showing? The answer is a combination of factors that all converged at the same time. And the result is something that caught even the most seasoned market watchers off guard. The first and arguably most significant factor is the dramatic shift in immigration and population growth policy at the federal level. For years, Canada was bringing in record numbers of immigrants, temporary foreign workers, and international students. Ontario, being the most popular destination for newcomers, absorbed a massive share of that population growth. At its peak, Canada's population was growing by over 1 million people a year. Think about that for a second. 1 million new people every single year, and a huge chunk of them landing in Ontario. That created enormous pressure on the housing market. Every one of those people needed somewhere to live, whether they were renting or buying, and the supply simply could not keep up. But then the federal government, facing enormous public backlash over housing affordability, over strained public services, over the sense that growth had gotten completely out of control, began to reverse course. Temporary resident numbers were slashed. International student permits were cut dramatically. The targets for permanent residents were reduced, and the effect has been swift and significant. Ontario is now seeing net outflows of temporary residents. People who were here on work permits and study permits are leaving, and fewer new ones are arriving to replace them. Some estimates suggest that Canada's population could actually shrink in the near term for the first time in decades. In Ontario specifically, the population growth engine that was driving housing demand has not just slowed down, it has gone into reverse in certain segments. This is huge. When you remove hundreds of thousands of potential renters and buyers from the market in a short period of time, the effects are immediate. Rental vacancy rates in Toronto, which were essentially at zero a couple of years ago, have climbed significantly. There are landlords offering free months of rent, cutting their asking prices, doing whatever they can to find tenants. And when the rental market softens like that, it has a direct impact on the investment property market. A huge portion of the condos built in Toronto over the past decade were purchased by investors who relied on rental income to cover their mortgage payments. When rents drop and vacancies rise, the math stops working. These investors start selling, which adds more inventory to an already oversupplied market, which pushes prices down further, which causes more investors to sell. It is a negative feedback loop, and it is playing out in real time. The second major factor is interest rates and affordability. Even though the Bank of Canada has been cutting rates, the reality is that borrowing costs are still significantly higher than they were during the pandemic era when rates were essentially at zero. A lot of buyers who were priced into the market at ultra-low rates are priced out at current rates. And there is a psychological component too. When prices were going up every month, there was a fear of missing out that drove people to stretch their budgets to the absolute limit. Now that prices are flat or declining, that urgency is gone. Buyers are sitting on the sidelines, waiting, watching, and in no rush to make a move. Why would you rush to buy something today if you think it might be cheaper in 6 months? That wait-and-see mentality is crushing demand. The third factor is the sheer amount of new supply hitting the market, particularly in the condo segment. Toronto and the surrounding area have had an unprecedented number of condo units under construction over the past several years. These projects take time to build. So many of them were launched and sold during the boom times, but they are completing and delivering now in a market that looks completely different from when they were first conceived. Thousands and thousands of new units are being delivered into a market where demand has fallen off a cliff. The result is a glut. There is simply more product available than there are buyers or renters to absorb it. Now, here is where the political angle comes in, and this is where things get really interesting. Ontario Premier Doug Ford has staked a huge part of his political legacy on housing. He set an ambitious target of building 1.5 million homes over 10 years. He overrode municipal zoning decisions. He opened up greenbelt land for development, which became a massive scandal and forced a reversal. He created a whole framework around the idea that Ontario needed to build, build, build to solve the housing crisis. His entire governing philosophy around housing was based on the premise that demand would remain sky high and that the only solution was more supply. But what happens when demand evaporates? What happens when the fundamental assumption underlying your entire housing strategy turns out to be wrong, or at least wildly overstated for the current moment? That is the situation Ford finds himself in right now, and by all accounts, it is causing serious concern behind the scenes. The developers who were supposed to be building those 1.5 million homes are pulling back. Projects are being delayed, some are being canceled outright. Pre-construction sales have fallen dramatically because investors, who used to snap up units before the foundation was even poured, are no longer interested. Why would they be? The rental yields do not work at current prices and interest rates, and there is no guarantee of price appreciation anymore. Without investors driving pre-construction sales, developers cannot get the financing they need to start building. It is a catch-22. The government wants more homes built, but the market conditions are making it economically unviable to build them. This has put the Premier in an incredibly awkward position. On one hand, he cannot exactly celebrate the fact that housing demand is falling, because that means the economy is softening, people are leaving, and the growth story he has been telling is unraveling. On the other hand, he cannot ignore it either because the construction industry, which is one of the largest employers in Ontario, is starting to feel the pain. Layoffs are happening. Trades workers who could not find enough hours in the day 2 years ago are now struggling to find work. Construction cranes that once dominated the Toronto skyline are finishing their current projects with nothing lined up behind them. There have been reports of the Premier's office holding emergency meetings with developers, with industry groups, with economists, trying to figure out how to respond. Some of the ideas being floated include incentives for first-time buyers, tax breaks for developers, streamlining approvals even further, and even direct government investment in housing construction. But the fundamental problem is that you cannot force people to buy homes they cannot afford or do not want, and you cannot force developers to build projects that do not make financial sense. And here is the deeper issue that nobody in government seems to want to talk about honestly. The housing market in Ontario, particularly in the Greater Toronto Area, was artificially inflated for years by a combination of ultra-low interest rates, massive population growth through immigration, speculative investor activity, and a cultural obsession with real estate as the primary vehicle for wealth building. All of those factors are now either reversing or weakening. What we are seeing is not some temporary blip. It is a fundamental repricing of the market to reflect a new reality. The people who have been saying for years that Canadian real estate was overvalued, that prices were disconnected from fundamentals, that the whole thing was a house of cards propped up by cheap money and population growth, those people are starting to look very prescient right now. And the political class, which spent years cheerleading the housing boom and benefiting from the economic activity it generated, is now scrambling to deal with the hangover. Let's also talk about what this means for everyday Ontarians, because this is not just an abstract economic story. If you are a homeowner who bought in the last 3 to 4 years, You may be underwater on your mortgage or very close to it, especially if you bought a condo. That is a stressful and frightening situation. If you are a renter, the softening market is actually good news for you in the short term, as you have more options and more negotiating power than you have had in years. If you are a first-time buyer who has been waiting on the sidelines, this might eventually create an opportunity. But timing the market is incredibly difficult, and there is no guarantee that prices have bottomed out. If you work in the construction industry or in real estate, the outlook is challenging. Fewer transactions mean less commission income for agents. Fewer new projects mean less work for trades. The entire ecosystem that grew up around the housing boom is contracting, and that has real consequences for real people and real families. The municipal level is feeling the squeeze too. Cities across Ontario relied heavily on development charges, the fees that developers pay when they build new projects, to fund infrastructure, transit, and public services. When development slows down, that revenue dries up. Several municipalities in the GTA are already warning about budget shortfalls directly tied to lower-than-expected development activity. That means either service cuts or property tax increases for existing residents, neither of which is politically popular. What makes this situation even more complex is the uncertainty about what comes next. Will the federal government reverse course again on immigration and open the floodgates to restore population growth? Will interest rates come down enough to reignite demand? Will developers find a way to build more affordable products that appeal to a broader range of buyers? Or are we entering a prolonged period of stagnation or decline in Ontario's housing market? The honest answer is that nobody knows for sure, and anyone who tells you they do is either lying or trying to sell you something. But what we can say with confidence is that the old playbook is not working anymore. The assumptions that guided housing policy and investment decisions for the past decade are being challenged in real time, and the adjustment is going to be painful for a lot of people. The Premier's response so far has been a mix of deflection and damage control. There have been statements blaming the federal government for the immigration changes, arguments that the market is just going through a temporary correction, and assurances that the long-term fundamentals remain strong. But behind the scenes, there is genuine alarm. The housing market is not just a line on a chart for the Ontario government. It is deeply intertwined with the provincial economy, with government revenues, with employment, with consumer confidence, with everything. When housing wobbles in Ontario, the entire economy feels it. And let's be real about something else. The political calculus here is brutal. Ford and his government encouraged people to see home ownership as the path to prosperity. They encouraged building, encouraged investment, encouraged the whole machine to keep running at full speed. Now that the machine is sputtering, homeowners are angry, developers are frustrated, construction workers are worried, and renters, while perhaps benefiting from lower rents, are still dealing with an overall economy that is losing momentum. This is a story that is going to continue to develop over the coming months, and it is one of the most important economic stories in Canada right now. The Ontario housing market is not just a regional issue. It is a national bellwether. What happens here ripples across the entire country, affecting banking, affecting pension funds that are invested in real estate, affecting the national GDP, affecting everything. What we are witnessing is potentially a generational shift in how Canadians think about housing. For decades, the assumption was that real estate only goes up, that buying a home is always a good investment, that you cannot lose in Canadian real estate. That assumption is being tested right now in the most dramatic way we have seen in a very long time. And the political leaders who built their platforms on that assumption are finding out what happens when reality does not cooperate with the narrative. So where does this leave us? It leaves us in a period of profound uncertainty, but also potentially of opportunity. If prices come down to more sustainable levels, if the market recalibrates to reflect actual incomes and actual demand rather than speculative frenzy, that could ultimately be a healthy thing for Ontario in the long run. The problem is that the transition from an overheated market to a balanced one is never smooth, and there are always casualties along the way. The question is whether the political leadership in Ontario is capable of managing that transition honestly and effectively, or whether they will continue to cling to the old narrative and hope that the old dynamics magically return. Based on what we have seen so far, the Premier seems to be somewhere between panic and denial, which is not exactly reassuring. But the market does not care about political spin. The market is doing what markets do. It is adjusting. And for Ontario, that adjustment is turning out to be a whole lot more dramatic than anyone in power was prepared for. If you found this video informative and you want to stay on top of what is happening with the Ontario housing market, the Canadian economy, and all the political drama surrounding it, make sure you hit that like button because it really does help the channel grow and it helps more people see videos like this one. Drop a comment below and let me know what you are seeing in your local market. Are prices dropping where you live? Are you seeing more listings sitting unsold? Are you a buyer waiting on the sidelines or a homeowner watching your equity shrink? I want to hear from you. And if you have not already, subscribe to the channel right now so you do not miss the next update, because this story is far from over. And the next few months are going to be absolutely critical. Thanks for watching, and I will see you in the next one.